In the crypto world, social media is very important, but that's not always a good thing. Twitter, Reddit, and TikTok have developed into virtual hubs for both cryptocurrency investors and fans, which also makes them a prime target for a specific kind of scam known as the pump, dump. According to research from cryptocurrency data company Analysts, these scams, also known as rug pulls, generated 37% of all cryptocurrency scam revenue in 2021, and generated more than $2.8 billion worth of cryptocurrency, up from 1% in 2020. Cryptocurrency pump dumps occur when criminals inflate the value of a currency with false information before making a profit on the sale of the currency. An investor's experience with the Squid Game cryptocurrency is recently the subject of a cautionary story. The Squid coin's value would surge 1 second before plummeting the next. The coin's developers are thought to have taken $3 million from investors and cashed out. In January, a class action complaint was launched alleging Kim Kardashian and Floyd Mayweather of inflating the price of Ethereum Max, a coin unrelated to Ethereum, before firm leaders sold the coin for a profit, leaving the rest of the market with essentially useless cryptocurrency. We were unable to get in touch with Kardashian or Mayweather for comment, and numerous other outlets have reported that they were either unreachable or did not react to such inquiries. Before we move any further, subscribe to our YouTube channel. More than 17,000 alternative coins exist, but experts suggest sticking with Bitcoin and Ethereum. Compared to more recent cryptocurrencies, they have longer histories of value rise, which explains why. When investing in any kind of cryptocurrency, experts advise keeping your holdings to 5% or less and only doing so if you have an emergency fund, have paid off all of your high-interest debt, and are simultaneously pursuing a diversified traditional investing plan. Experts warn that investing in cryptocurrencies carries additional dangers, including those associated with pump, dump, and other schemes, in addition to the fact that they are frequently significantly more volatile and speculative. Here is the information you need to know about cryptocurrency pump, dumps, and how to avoid them. How does a pump, dump scam work? A pump, dump scheme occurs when a group of traders, such as the coin's creators or partners, disseminate false or misleading information to artificially boost the price of an asset before offloading their shares at the higher price. This can result in significant losses for average investors, and it is more likely to occur when buyers are influenced by online advertisements and lack knowledge of the coin. Things can get even trickier in an investment market that is largely unregulated. In contrast to the stock market, where pump, dump schemes are prohibited, regulations for cryptocurrencies are still being developed, giving con artists the chance to see what they can get away with. If you notice that other people are making money, or at least claiming to, it can be alluring to follow the trend. Kiana Danielle, founder of Invest Diva and author of Cryptocurrency Investing for Dummies, says that it takes a lot of self-control to resist the urge to copy others, much less a celebrity you adore. According to Danielle, this occurred with penny stocks and during the dot-com bubble because investors wanted in despite not understanding what was happening. She claims that the same catastrophic outcomes apply to cryptocurrencies. People are falling for it because they are uneducated, the statement goes. Danielle advises investors to research a given altcoin's function, history, and community before purchasing it. See what this is about by going down the rabbit hole. What issue are they addressing? Asks Danielle. According to her, value comes from projects that make things easier for people to do or from category kings, when a company's name has become a verb, like Google. All of the FOMO and hype will eventually fade away, she predicts, and those who are actually adding value will triumph. Do your homework before purchasing a new altcoin to prevent falling victim to a pump, dump scam and losing money. According to Danielle, it's crucial to comprehend the asset you're considering, rather than simply purchasing it because you like the concept of blockchain or decentralization. She asserts that human psychology drives market behavior. Cryptocurrency's lack of regulation makes it simpler for scammers to operate. According to Doug Boneparth, certified financial planner and head of Bonafide Wealth in New York. The hype factor, the "this is the new cool thing" factor, he adds, is present as well. Even though many early adopters of cryptocurrency as a new asset class legitimately became wealthy, the development of a new financial system is still in its infancy. According to Bonaparte, there will inevitably be a lot of noise in this newness. According to Bonaparte, the best place to start learning about peer-to-peer transactions is with the Bitcoin white paper. It serves as a good introduction to the operation of blockchain technology. You must comprehend the underlying technology that powers everything, he advises. And you can keep reading about cryptocurrencies and blockchains. According to Bonaparte, crypto is currently like the Wild West. There is so much amazing creativity, utility, and value being produced, but the more realistic, long-term information is drowned out by the extreme examples, both good and bad. Research is even more important for cryptocurrency because it is more risky because it is largely unregulated. Attempt before you pay. Start small and get a feel for how things operate before investing in riskier altcoins. According to Bonaparte, just figuring out how to connect or link your checking account to an exchange and buy cryptocurrency is a big learning experience. You're currently confiding in a system that is unreliable. When have you ever carried that out? Start with a small investment, such as $1, $5, or $20, to understand how things work before investing all of your money in a coin you just learned about. It's a $20 learning experience that, according to Bonaparte, might pay you massive dividends by understanding where things are going, and possibly open your mind to legitimate investment opportunities. And even if you lose $20 or less, that brings us back to another expert recommendation. Don't invest more in cryptocurrencies than you can afford to lose in case their value plummets or, worse, is linked to a dump scheme or other scam. Continue using your plan. You can decrease your likelihood of falling for scams by developing and following a strategy. Because she focuses on value investing, where a stock appears to be trading below its intrinsic value, Danielle claims she is not tempted by dumps. Even though Warren Buffett opposes cryptocurrencies, Danielle ironically applies Warren Buffett's value investing strategies to his investment portfolios and crypto investment strategy. An investor can understand the value of Ethereum by looking at how it can be used to produce NFTs and other dApps, decentralized applications. Determine your approach and risk tolerance, weigh the advantages and disadvantages, and monitor the market's mood, advises Danielle. Danielle says, "When I see a high, I'm like, oh, that doesn't even fit in my strategy. Because I am competent and have a plan, I am willing to pass up an opportunity. I don't search for trends on Twitter to decide what to buy. Watch out for promotions by celebrities and influencers. The influencer or celebrity may be endorsing a particular currency for a variety of reasons, including the fact that they are being compensated to do so, they own the coin and want to increase its value, or they genuinely believe in it. But it's improbable that they're just trying to make you rich." If you hear other altcoin investors bragging about how they were so early to a particular new coin, try to figure out why anyone else might be coming later to invest more money. According to Bonaparte, they're supporting your investment, which is typically what they are investing in. We're growing, but that doesn't mean you should invest money in it. Instead, you should go learn everything you can. Additionally, con artists may contact you directly and pose as respected influencers. If someone you follow seems to be messaging you, look into it further, because this is a problem that frequents the minds of reputable personal finance experts who have developed active communities on Instagram. On Instagram, TikTok, and Facebook, I have more than 1,000 impersonators, claims Danielle. They copy my name and steal my images, including those of me and my daughter, before following and mailing my followers in an effort to defraud them. Google the person's handle and see if it matches the verified handle of the person they claim to be if someone contacts you and says they just want to give you some great advice or some free coins, advises Danielle. Never reply to anyone unless you've checked them out online and determined they're the real deal. If it feels fishy, it probably is, she advises. This is it for today's video. Stay connected with us by subscribing to our channel. Thanks for watching.